Hello, Dilly. Good morning. How are you?
Good morning, George. I'm doing good. How are you?
Excellent. Excellent. I am so excited about this space. Our good friend Shrub is back. We
Hell
haven't
yeah.
we haven't spoken for a good while, but I'm going to shamelessly shill for Shrub and promote his Substack. I'll put it up in the nest later, but he didn't ask me to do this. That's what setup guys are for. I can shill. So anyone who doesn't Shrub out of nowhere, he's got like one of the top shrub stacks. I stand corrected. Shrub
Shrub
stacks out
stack.
shrub stacks.
That's a mouthful.
Yeah, shrub stacks, and say it like 5 times quickly,
Shrub
and,
stack.
and and we'll put it up. I'll put it up in the nest, but I subscribe to it, and
hmm
unlike a lot of these folks who just traffic and macro narratives and LARP all the time, he actually names names and prices and ideas, and he's not right all the time. Doesn't matter, none of us are, but he's
Yeah.
always provocative, and he's got more than his
Ooh.
share of good calls, and so. I urge everyone cancel all your other Substacks and subscribe to the
Shrub
Shrub Stack.
stack.
All right, Shrub, how are you, my friend?
I'm all right, buddy. How are you, George? It's been a
Excellent.
while. I missed you.
Long time no talk. You don't write. You don't call. Actually, you do write. It's just I never
Not to
reciprocate.
you.
Yeah, not to you. So,
Now we
so
exchanged a couple of DMs lately, but
I
it's been a
know, I
while.
know, I know.
Been a while.
So, so those of you who don't follow Shrub, and I'll put his link up to his Shrub stack in a minute. Um, if you want to know where this title came from, I thought it was just classic Shrub. I wouldn't expect it from anyone else. I wouldn't expect anything less. We are
I want to know
so.
where you figured out how to like put
Oh,
the like
Dilly.
what were you doing? What were you Googling where you figured out how to like copy and paste the letters
Well,
like
well, well,
that?
well, well, Dilly, there are a few things I don't know, like
Yeah.
like a lot of like really simple things I can't do. But you'd be
hmm
surprised. Like I have been known to wander into the wrong spaces
Yeah.
for
Yeah.
for deviant activities. Well, I also know how to use a strike through thing. So if anyone
I
wants,
saw that and I was like, "Ooh, George is getting spicy."
yeah, so maybe so Dilly, you know what we could do? We could have a special webinar. I could show everybody.
Ooh,
I could show everyone my tricks. It'll last about 2 minutes. That's all I know.
yeah,
So
right.
anyway, so before we get to Shrub, just for those of you that don't know these important things, it's like they always say, Dilly. I'm old enough to remember when. So you always want to know where I get my songs from. So I just start surfing. So this was an oldie but goodie for those of you who don't know it. This was Eddie Kendricks from 1973. I remember it growing up as a kid, but what I didn't know was he was originally a member of the Temptations. Anyway, this was released in
Wow.
August of '73. It made it up to Billboard, I think. It reached number one on Billboard Hot 100 in the R&B singles upon its release. It also made up to number 18 on the UK charts. So anyway, that's Eddie Kendricks. Keep on trucking. 1973. All right, enough of that.
Thank
So,
you.
Shrub, what kind of music you like? Are you into music?
I'm very much into music. I am still a classic rocker. I play guitar. I still play. I collect guitars as a passion. I was in a classic rock band. I was in a metal band, and I'm still actually like I still go to like any rock concert, any metal concert I can find.
Got it.
And I also like the blues, the old blues stuff. So I do like some some Delta blues once in a while.
That's awesome. So Shrub, in a recent room, I've been talking about recent space we had. I was talking about these tribute bands.
Oh
You know
my God,
these.
I
Yeah,
knew it was coming.
yeah,
Okay, because you know it was
yeah. I
Dilly.
know,
Every time,
man. I know.
Every time you want to talk about Bitcoin, I'm going to talk about tribute bands. So
You
anyway,
need you need like a promo code for what is the name of this band?
yeah, I know. So Shrub, where you are, they have tribute bands over in your part of the world?
Yeah, of course. I mean, I had a so let's so I was having lunch with a friend a few days ago, and he was like, "Oh, I'm going to see Led Zeppelin," and I said, "No, no, no, there's no way you're going to see Led Zeppelin." No, no, I bought tickets. It's like,
Right.
dude, I saw Led Zeppelin in 2007. That's the last concert that they ever made. That's it.
Yeah.
And he showed me the tickets,
So
and it was like Dread Zeppelin or Led with two Z's.
yeah, exactly, exactly. So Shrub, I got to tell you, these tribute bands are a thing because, as you know, there's a market for all this great music, but unfortunately, in many
Yeah,
cases,
of course.
the original performers are no longer around. And I got news for you: some of these guys, like,
Oh, they're
okay, the
very
vocals,
good, man. They're very
they're
good.
awesome.
Like,
And I got to tell you the funniest one. I'll stop on this because Dilly she's probably already furiously DMing me, say stop it with the tribute bands. But I went to one, and I didn't go on my own. This wasn't my idea. It was my partner's idea. She wanted to hear ABBA. There's this great copy band, tribute band for ABBA. And the funniest thing was, we got there. It was awesome. People were going nuts. But here's the best part. And it was like the 50th anniversary of, their smash hit, 1974, whatever. One of the original members of the ABBA band was there.
oh
The
no
guy's like in
way.
his,
That's
the guy's like in
awesome.
his early, the guy was like in his early 80s. He got up there on stage and was playing with them the whole time. It was so cool.
That
It
is
was
cool.
so
Well,
cool.
I'm
It
going to
was
tell you
so
one
cool.
thing from my side because I'm going to see Black Sabbath on the 5th of July, which is their last concert ever. And I went to their last concert, their last concert, which was in 2016 or something, the last tour. So now they're doing a last one. But on the last one, I think Ozzy won't be able to even stand up to play. So I think he's going to be sitting and just singing like 5
Oh,
songs.
wow.
So
Wow.
I'm kind of like, I'll be going to see tribute bands after that because they probably will sound better than the original after
Yeah,
this
yeah, yeah.
point.
Shrub. They do sound better than the original. And secondly, they're so much cheaper. You can go to these things for like 30 or 40
Yeah,
bucks. It's
exactly. And you're
nothing.
gonna have a great time. Yeah, you're gonna have a
Ah,
great time.
I love this stuff.
Yeah,
I
same.
love,
I
love,
agree.
love this stuff. All right. Okay, so we got so much to talk about, Shrub. And you're never shy. So
I
let's
can.
start.
Yeah,
Let's start with the title of the room. We are so Trump. Okay. So don't worry, we're gonna get into a free fall pretty shortly. So, but maybe just start with that. Maybe I could just tease
we
out for
are.
you.
Yeah,
We are so Trump. So talk about the thinking behind that title, Shrub.
the 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 motto of ShrubStack is once you realize it's all nonsense, it starts to make sense. So once you realize it's all nonsense, it all starts to make sense. So
Dilly, you have to tweet that out. That is like that's probably the most important thing he's going to say the whole time.
yeah,
Shrub,
exactly.
thank you very much. Quit while you're
That's
at it. No,
it.
I'm
Okay,
teasing you,
thanks for
dude.
my
I'm
TED
teasing you.
talk. Thanks for my TED
There you
talk.
go. There you go,
Thanks
Shrub.
for my
There
George
you go.
Spaces.
All right, go ahead. Go ahead. Keep going,
but
Shrub.
but but honestly, this is so important because I see people just getting lost in all this noise, and they're like, oh my god, Trump tweeted this and Trump tweeted that, and they just they actually believe the tweets or they act on the tweets where actually it's all nonsense. So that's a good starting point. So you know so a lot of people, for example, believe that Trump wants to cut the deficit. Well, that deficit is not going down because they're going to pass a tax bill that's going to raise the tax deficit. Or, for example, the biggest mistake that people made at the beginning of the year was, people believe the administration has a strong dollar policy, and the dollar just got decimated. Or people believed that, Trump wanted the markets up, which he actually didn't. He wanted to solve certain things first, and the market collapsed into April. And then, and then at the beginning of April, after Liberation Day, well, people believe that Trump wants to rewrite the whole global trade and keep tariffs at 140%, which would effectively be an embargo to trading, as Besson himself said. So people did believe that, and people did get negative and dump their whole equities. And guess where we are now? We're back to like, well, we don't want an embargo. We actually want to still trade. So let's just get tariffs down to 30%. So if you had a mentality that, sorry, if you believed everything they said, you would have lost a lot of money. Except the point when Trump told you to buy stocks. That's the time when you should have believed him, because both times that he said to buy stocks, the first time generated like 14% run up. Well, actually now he's up 20% on that first call, and on the second call he's up 5%. So from that perspective, he was absolutely right. And by the way, this is not to say Trump said something wrong. Actually, what the market participants interpreted Trump. So market participants interpreted that Trump was bullish, wanted the market to go up in January, and they interpreted that Trump wanted a strong dollar, whereas Trump was telling them, I don't care about the markets. So it was the market interpreting, wanting to put words in his mouth. So actually, when Trump said to buy stocks in April, that was a 100% clear statement. When Trump said to buy stocks, last week, that was a 100% clear statement. but everything else was all nonsense. Everything was just trying to interpret and just make their own narrative around his statements, around certain actions, which were in reality, it's like it's a very fluid playbook, which creates a meme market. So you have to be flexible in your thinking, and you just have to realize that everything is nonsense and everything changes quickly. So if you just keep that mindset, you'll be fine. And on top of that, we also have to appreciate that this period of market, I call it the gag. It's the golden age of grift. So once you overlay that on top of your investment decisions, it also makes even more sense. So what I mean by that, so grift is something that's inherent in the system. That's fine. We've had it for decades. The previous administration was grift. The current administration is grift. It's fine. We have it in Europe as well. Everything is grift here as well. But this time round, it's also done very much in the open. And once you realize that, I'm not here to accuse anyone. I'm here to trade the markets. So once you realize that, you can actually trade the markets around it.
Right. So so there's a whole cottage industry has started up. It's always the hot takes, the narratives.
Yeah.
We go from people being, you know, an expert on trade to world-renowned epidemiologists to experts on nuclear to experts on Jevons paradox and AI to, whatever the hot take is.
Yeah.
Okay, so is your attitude to sort of go along with the lie until you realize maybe it's enough, and realize, because you can trade these memes and these lies profitably. You just got to know when to get out.
Yeah, exactly. So here's how I was doing it. So I actually try to see, I'll give the DeepSeek example because that one was the best example of how stupid all is. Okay. So this was late January. I was with some family offices here in Monaco and this wealth manager, and this was Friday 29th of January or something in the morning. And I saw the DeepSeek news come out, and I was reading up on it. And as I was having coffee with these guys, all they were doing was talk about Nvidia. Bear in mind, we're based in Monaco, and these guys, they had 1,000 other stocks to talk about, but all they were talking about was Nvidia at 148, I think it was. And the DeepSeek news came out, and I figured that this was actually going to be pretty bad for Nvidia. So I shorted, I shorted the market. I shorted Nvidia pre-market. And then these guys were telling me, well, Nvidia, great company. We bought some yesterday. And I said, look, I just shorted Nvidia. And I laid out my rationale to them. My rationale was this DeepSeek brings the computing demand way down, brings the costs way down. And this is a DeepSeek moment is like a Sputnik moment, whereby the Chinese are the David and the Nvidia is the Goliath, or the US is the Goliath in terms of tech. So this should be like this should put a blow to the narrative. So these guys completely ignored me and continued having their coffee, and that was it. And then on the same kind of time, SoftBank's CEO, which I referred to as Masa Ponzi-son.
Masa Ponzi son. Shrub, do you make this stuff up yourself? You're
Yeah, dude. I
genius,
mean,
bro.
this is why I do it. I just do it to keep myself sane. That's like I'm in a I'm in a room trading. So if I don't make these things to laugh, I go crazy. So that's why I come up
Yep,
with this
yep,
shit.
yep.
So
Go on.
so Masa Ponzi-son, he was having this. He came up with Stargate. This was the day before DeepSeek. He came up with Stargate, and he was so happy to shake Trump's hand, and he said like 500 billion. We're gonna spend 500 billion. High-fiving Sam Altman. uh, you can call Sam Altman like Scam Altman, and just saying we're going to spend 500 billion in data rooms and we're going to create Stargate. And I was looking at that as like, well, there's something that I call like meme top. So a meme top is a meme moment in time that marks, it's a milestone that marks a local top, in the sense like it's like you see a thing that's so stupid, and you're like, well, you know what? This is a top. It's not necessarily the top, but it could be the local top. So when I saw Master Ponzi's on just waving and being so happy, I'm like, oh my god, that has to be like a top. The guy basically said he's going to spend 500 billion, and he didn't even say how much he's going to make out of it, or what he's going to make out of it, or what he expects to get out of it. Like he's just going to throw away 500 billion. So the next day, DeepSeek comes out, and I'm like, you know what? There's a perfect short for the Nasdaq, because the Nasdaq end of January was driven by Nvidia and AI. So I short the Nasdaq, I short Nvidia, I write a piece out because I do things real time. I wrote a piece and I sent it out, and Nvidia was actually up 2%, and I'm like, I can't be that stupid. Like kind of I kind of know that this is bad, and Nvidia was actually up 2%, and then Wall Street came out talking about Javan's paradox, and I was reading this Javan's paradox, and I'm like, this is this is like the dumbest excuse I've seen for people to keep what they to stop people from selling the stock, because Javan's paradox, or whatever you call it, Javans, like this, they dug up this obscure economist from the 1800s that no one's heard of, and I started economics at Oxford University, so I should kind of like I would have cared about Javans if it mattered on that on that
Yeah,
scenario.
and Shrub. Let me interrupt for 1 second. And then to make it worse, you have people on. You have these furus on Twitter. I keep calling it Twitter, who write. They go, okay. Jevons paradox. All right. So the Daily Letter thread. They'll write like 12 paragraphs on Jevons paradox. I mean, like it's a thing, and then everyone does the same thing. It's unfreaking
Exactly,
believable.
exactly. So
Go on.
they dug up this guy from his grave, and they're just parading him around. It's like, look, it's Jevons, guys. Forget about DeepSeek. It's about Jevons.
Right, and then Shrub. If you don't know any better, it's like, oh, I got to read up on Jevons
Oh
paradox.
my
I,
God,
I
it's
I need to
Jevons.
know about this guy.
Yeah,
Go on.
and by the way, I'm sure there was a guy who was waving around Jevons paradox for Cisco in 2000, right? He was like,
Exactly, exactly,
it's
exactly.
like, and guess what? By the way, Jevons was right, but it took 20 years to be right. So, as a trader, I actually don't give a shit about these things. That's why, to your earlier question, how do you know? It's like, well, I try to smell the bullshit. And when I saw the Jevons thing thrown out with something that was momentarily negative, like DeepSeek comes out, it reduces computing cost by 1/10. So it's definitely negative, like 100% negative, NVIDIA and the AI thing, short term. Long term, Jevons will be right. Could be 5 years, 10 years, or 12 months. I don't care. But short term, it's negative. So I put the short on, and I'm wrong for the first hour. So I'm wrong for the first 3 hours pre-market because I'm in European hours. So I put the short pre-market, and I'm wrong for the first 1 hour in the open, which felt like a long time. And then people are like, Wall Street is trying to get everyone to think that, Jevons matters more than DeepSeek. And then the smart money, as every monkey is buying more Nvidia and more Nasdaq, the smart money knows the reality and they're just selling. And then at some point, it just goes like, bleh. It just pukes.
Yeah,
So it goes, and
and
then it
Shrub.
just, yeah,
Yeah,
and then it just became sharper and sharper. And then it took like a 20% off
yeah,
at some
yeah.
point.
So
But
Shrub. When it collapsed down near 90, did you at least monetize some, ring the
yeah, no,
register?
I close everything. I close everything. So I
Yeah.
trade.
Okay. Okay. So now you're getting another bite at the apple. Hello, 133 and
So
change. Hello.
yeah. So George, so look, there's a meme moment. What did I say about meme tops? So meme tops are like moments in time. So now we're back to a meme moment in time when you and I have our first faces since February 2022. Well, no, the first time we had a space together was February 2022. Not our last one. Our last one
Yeah. No.
was
Yeah.
like,
Yeah.
yeah.
We had one later in the year. Go
So
on.
yeah,
In the
but
good old days or the bad old days. Go ahead. Yeah. Go on.
our first
Yep.
one was actually Jan or Feb 2022,
Yep.
and it was with Stan Weinstein, and that
Okay.
was like that I told you back then, that was the most profitable spaces I've ever had in my life, ever.
Okay.
I finished 22 up like 70-80% of the year, and I think
Right.
I made 1/3 of the money like after that spaces because
Right.
Stan very correctly, he said one thing. I'm going to find the tweet. Actually, I'm going to find the tweet now because that was brilliant. So he said one thing very clearly. He said, watch for the 30-week moving average.
Okay.
And he was showing people, you remember when the Nasdaq, well, we had the top in December 21,
Yeah.
and then the Nasdaq had a sell off, or the S&P had a sell off, and then it had a bounce back, back up, and people were using different indicators, but Stan likes to use the 30-week average, the 30-week
Right.
moving average, and he
Okay.
was saying, and back then the rally, the market snapped back, and Stan was saying, look, if it if it hits the 30-week average at this point, from the bottom, then the market rolls off. Well, that's a very similar to this bear market and
Right.
that bear
Right.
market and
Right.
that bear
Right.
market.
Right. Right. Right.
And that was actually the best short entry of the year. And
Awesome.
yeah, that was a bit. Now here, I actually checked all the indicators before we started. We're not
Sure.
there yet, but I'm gonna share the one trade that I did today. So
Yep.
I don't have anything. I don't have anything short, but I did one trade, that I want to share uh, with
And
Boyd.
again, for everyone in the room, this is not
Not
financial
financial
advice.
advice,
Like
nothing. Yeah.
Shrub is like Stan Druckenmiller. He could change his mind, an hour from now,
Oh
but
yeah,
he's
yeah,
honest and he's telling you what he's thinking, and he's going
yeah.
to tell you why. Go
Yeah,
ahead, Shrub.
so I did this trade, which again, yeah, not financial advice. Everything I do is parody anyway. So I could be a guy just trading out of my parents' basement, like I always say. So, but here's how I think about it, because I don't think it's a market you want to be short, because you come in and there's a Trump headline, they sign another deal with Japan and it's up 2% and you get stopped out, and then you know what I mean, or they have a ceasefire in
Sure.
Ukraine and it's up, well, hopefully, and then it's up 2% again. That's fine. So I don't think the short is a sleep well trade here, and because I have a long portfolio, um, my portfolio is just long pretty much. I've been running like 80% long all year, not all year, and for the last month or so. But my portfolio is kind of weirdly structured, so I won't get into the long side. I'll just tell you the hedge I did today. So the hedge I did today is, I thought, okay, the VIX crashed from 50s down to 18 now. So the volatility is quite cheap. The market is up 20% from the lows. Everyone is bullish, and fine. And everyone assumes that there is a trade deal. Not that there will be. Everyone assumes that there is a trade deal, and that the 90-day truce is actually the deal. But what if, let's just say, what if after 90 days, the two parties don't agree? Like US doesn't agree with China, or the Europeans don't agree because the Europeans have been a complete mess. So after 90 days, we could be back at this again, in theory. I'm not saying we will. I'm saying we could. So that's number one. Number two is, there is this big beautiful bill about that Trump wants to pass before July 3rd, and that big beautiful bill, on paper, is very bullish equity markets, because you're just you're throwing more juice to the system. Fine. But what if the bond market, um, what if the bond vigilantes wake up and say, well, hang on, you can't juice up, you can't increase your deficit by 3 to 4 trillion more with this bill. So what if the bond market pukes in the next 2 months, as a warning sign, and saying you can't do this? And for people that think that that can't happen, well, that's what happened with Liz Truss, right? When she got elected, and she lasted less time than a lettuce in power. So the Liz Truss moment for the US is very unlikely, but it's still like a small possibility. So put all that together, and the next 3 months, I know we're all getting, everyone's getting bulled up and excited, but I think this is the time that it's, I'm gonna place some chips in hedges. So I usually just, the way I think about it is, if I'm 80% long, I'm gonna spend, maximum 1% of my NAV for the next 2-3 months in puts. So what I did is I said, okay, 90 days out, you're going to have this tariff truces and, the tariff truce expiry. 90 days out, you're going to get covered for this big, beautiful bill. So I'm going to buy August puts. And I'm going to go with put spreads on the S&P. So the ES futures, the S&P futures are now trading at like 5,900. So I bought a 5,600, 5,200 put spread, and I paid 50, and I can make 400 if we go back to where we were. So that's how I think about it. I'm like, look, if I'm invested in the market down, 10% again, say I lose 5%, but if I put 1% in a put spread for the next 3 months, that 1% can become like 6 to 8%, or depending how you structure it. So that's how I think about it, and that's actually the trade I did today, which I wanted to share because we're at a moment in time where the S&P is it's at a big point. Just a month ago, people thought that was the end of the world. Like I was looking at Mike Wilson, the Morgan Stanley strategist. He was calling for 4,700 S&P a month ago, and yesterday he called for a 6,500 S&P. So he went from
Wow.
4,700 to 6,500. So the way to trade this without blowing up is basically just say, you know what, 3 months out, a lot of things can happen. This is the time when you have to just be wary that because it's a very, I mean, it is a tough market because it's very headline driven, right? So you
Yeah.
basically just say, look, next 3 months, I'm going to spend X amount in protection, and the protection that I'm going to put on is going to try to make me like 6 to 8 times my money, or 6 to 10 times my money if it's possible.
Sure, that makes a lot of sense. Let me ask you. So we know life is not linear. The opportunity set expands and contracts depending where you are in the market. Right now, do you see a lot of things to do? And not just at this point in time, but as you think back over, say, the last 6 months, just like, when you look at the CNN fear and greed indicator, like,
Yeah.
okay, it's a faulty indicator, but it'll show you the moment in time and also tell you going back, like how it's changed. So if I were just to say to you, for, in your own head, a little bit of self-examination, in terms of your conviction level and in terms of the number of opportunities out there, would you characterize that there's a lot to do and you have high conviction, or there's not a lot to do with low conviction, or like how has your thought process has evolved over the last few months as you're with your conviction, or the principles you're using have kept you in good stead? And like right here, right now, do you see a lot to do?
There is a lot to do because I have an event. Like I was running an event-driven hedge fund. So for me, there's actually quite a lot of events to do, but they tend to be smaller than before and more fast-paced. So if I was running my old hedge fund, I'd be frustrated because, if say you're running 1 billion in this market, it's very, very difficult, huh? Because you can't get in, you can't get out. Now, for a small investor, um, there are a lot of opportunities on the small mid cap side that are very interesting. Um, but it is, let's put it this way, it's a very difficult market. It's not a market where you just sit back and enjoy the ride. So I'm going to say that you have segments that are waking up, you have events that are waking up, but it's on the smaller scale. On the bigger scale, things are a bit on hold. Um, for a good reason. Like the big companies, they don't want to do much until they see how it's gonna play out. But there's what I'm gonna say about this market is that the best thing to do is to wait for the fat pitch. So for example, the DeepSeek moment for me was a fat pitch. Or the other fat pitch I had was when I saw Zelensky get pounded by Trump and JD Vance in the White House. I thought that was a fat pitch to go long the euro and go long Europe. Because I kind of just had a feeling that the Europeans would revolt and want to take their own destiny in their own hands, which they kind of did with the German infrastructure plan. fiscal
Right.
plan. So you kind of want to sit back and just wait for the fat pitch. And at this moment in time, I actually think if I didn't put a hedge on my book, I wouldn't sleep at night, because right now things are getting priced in to the level where people are assuming too many good things. Let's put it this way. So I I've saved my butt by just having being cashed up when the fat pitch isn't there. And at this moment, the fat pitch isn't really there. So I'm like, let's put it this way, because I have a big allocation in something that I call like the golden age of grift basket. So let's put it this way, I can deploy 50% cash today if I wanted. So I have 50% buffer today to deploy. So that kind of tells you. Whereas, I would have been at 80% if there was a fat pitch, or 100%.
Right. So, Shrub, to your point, I just put it up in the nest. By the way, I did shamelessly show for your Shrub stack as well.
Okay.
But I just put up in the nest. If everyone looks at that tweet, and I'll just read here for those that can't see it. It says after a 28% drawdown in the beta factor over the first few months of 2025, our Goldman Sachs beta pair has emerged from the rubble with its best month of performance ever. Ever.
Yeah.
As tariff escalation, the soft CPI helped bid the equity market higher. The pair is now up 22% in the last month and 28% from the lows. Okay.
Jeez.
So as I always like to say, Shrub, things you don't see at the bottom. Okay. Now,
Exactly.
you know, 22% in a month, could it do 29% in a month? Yeah, anything's possible. But I think this is testimony to your point about, it's not a fat pitch right here.
Yeah, it's not a fat pitch.
So
Also,
it's crazy times, and also to your point, at some point, I know you watch charts. When this shit starts to roll, I mean, what a fantastic opportunity to, I don't know, do Nvidia or Carvana or whatever
yeah,
piece of garbage you want to short on the way down again. So yeah, no, I'm totally with it. All right, let's move along a little bit. So I want to come back to the Liz Trust moment. So we haven't talked for a
yeah,
long
yeah.
time, but great minds think alike. I've been relentlessly pounding on the U.S. bond market, and I put something out the other day, one of these shrub-like tweets, which showed Monday night or Sunday night futures with the futures screaming, bond yields going up, and I tweeted something like, they told me this wasn't supposed to happen. All right. So, we were going to get rates down, right? Okay. So, Shrub, you can have lower inflation, you can have lower interest rates, you can have, you know, lower bond yields. You can also have a good economy, rising profits, a good stock market, but you can't have all those at once. And so it's sort of like, it's simultaneous equations when you were in high school. It's like you're trying to solve to X, but it just doesn't work. So I'm kind of like, everything you're doing, and especially you triggered me. You reminded me of this big, beautiful bill and everything. Like, it's most people don't have it on their bingo card. It's a thing they say quietly, like, what happens if the bond market doesn't cooperate? And when people talk about U.S. exceptionalism, I keep coming back on, yeah, it's true we had these great companies and blah blah blah, and that hasn't changed. But in my view, what's been truly exceptional about the U.S. is the unprecedented fiscal profligacy, the unfettered spending funded by all the foreigners. We sucked on all the money. So I am watching carefully. It doesn't really matter right now, but if I say to yourself, Shrub, let's spitball here. How could this go off the rails? Like, what's the most likely way this could go wrong? I think the bond market revolting has to be one of the top possibilities. What are your thoughts on that?
1,000,000%. So I think the difference why the biggest danger of this market is actually the bond market. Because the equity market, you can make all the fun and games you want. We can drive Tesla and Palantir to the moon and whatever is fine. But once the bond market stops cooperating, that's when the real ugly stuff happens. And the American exceptionalism, as you said, is basically having the hubris to not even think about that moment. Right? And this
Yep.
is where it becomes dangerous, I think. And that's why there is a risk that we have that moment. Because what happened with Liz Truss? So, Liz Truss came in and she presented this bill that was increasing the deficit, but it was pro-growth, and the market just punished her. And I remember the sterling collapsing. Like, man, the sterling was trading like a it was trading like a shitco that day. It was like the bonds collapsed, the sterling was puking like an emerging market currency, and it was very ugly. That's why they had to actually step in. She canceled the budget, and then she was fired. And like I said, she lasted less time than a lettuce. I don't know if you remember that moment. So there was a TV channel that had a lettuce at the beginning of her presidency, prime ministership, uh, and they said, "Who's going to last longer, Liz Truss or the lettuce?" So the lettuce lasted longer than
Okay.
her. They actually had the
Okay.
lettuce. They had the lettuce for 40 days, and the lettuce lasted longer than her. so,
That's
so, so,
hilarious.
so
Got it.
back,
Yeah.
so back to the U.S. The problem we have here is what? So Trump is dealing with a few problems very well. So I think on the border side, his supporters are going to be pleased with the border side. On the trade war side, he crashed it, but then he brought it back up. So people are going to be like, "Phew, thank you very much." So it's kind of like a Stockholm syndrome. People being grateful that they didn't get screwed because people being grateful for getting screwed just a little and not too much, kind of thing. But in all this discussion, people are now getting excited about the big beautiful bill, which is very bad for the deficit. Is going to increase the deficit by just a few trillion. Whereas at the same time, all these guys were worried about the deficit just a month ago, 2 months ago, 6 months ago, and blaming the previous administration for blowing up the deficit, which they did, by the way, in a very bad manner, in a criminal manner. Let's be clear. but but we're at this moment in time where, because people were worried about the trade war, they haven't started worrying about the deficit that's going to come in with the big beautiful bill. So you can see a scenario. Oh, sorry, and that's just one part. So on the other part, that means the supply of bonds is going up. But on the other side, because there's always two sides to the coin, is the demand side is actually weakening. Because who's going to buy your bonds? Well, it's foreigners that buy the bonds. Because I think just the Europeans, I think they own like a third of the U.S. I think they own like 17% of the U.S. stock market and the equivalent amount of the U.S. Treasury market, something like that. I don't have exactly the numbers, but it was like
Yeah.
between
And by
between.
yeah. By the way, Shrub, as we speak, the U.S. 10-year is almost at 452, and the 30-year is closing in on 5. We're at 496 right now.
Yeah, but
Shrub, we got to keep this space going because as long as you're talking, the yields keep going up. Go on.
yeah, exactly. But yeah, I mean, George, who cares, man? It's just the bond market.
Yeah.
Tesla
Exactly.
is like Tesla is up. Who cares? I mean, and that's
Yeah.
gonna,
Exactly. Exactly.
who
Exactly.
cares? But and also, the other argument is, you know, someone's gonna say, "Hey, Shrub, George, you guys don't get it. The bonds are down because growth is going up." That's the other one. So, so anyway, look. So the point is, no one worries about it's. Basically, people are so tired. Investors are so tired from all these headlines that they're just focusing on what is in front of them. My theory. My theory is that the market is just run by monkeys. That's it. We're all monkeys
Yeah.
just trading this market, it's a nonsense market. So monkeys are very one-dimensional in their thinking. They just see what's in front of them. The banana that's in front of them. They don't think about the banana that's on the next tree.
Sure.
It's the one that's in front of
Sure.
them. And right
Sure.
now, what's in front of us is the trade war. So no one's thinking about
A
the
hundred
deficit.
percent. Yeah, you know what? Yeah, Shub. Let's wind the clock back because people may have said this year is gonna be more volatility and Trump and this, that, whatever. But nobody had this type of crazy trade stuff on their bingo card. And so, if you go back to the beginning of the year, let's say we did this space, we're spitballing at the beginning of the year. Go back to our regularly scheduled programming, so to speak. It's not Jevons paradox. It's not this other stuff. It's like, hey, wait a second, growth is kind of slowing. We got a problem here with the deficits. Blah 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 blah. And in a way, this trade thing has kind of been a distraction. By the way, Shrub, do you remember this one combo we had? Like, I've been in a lot of spaces, but there's certain moments that you just remember. I think this would have been like the second quarter of 22, and at one point, you and I were spitballing back and forth. And we had almost the exact same conversation. It was like, and I think you said or I said, "Who's going to buy the bonds?" And we just started cracking up laughing.
Oh
It was.
yeah, I
Do
remember
you
that
remember
really
that?
well. I
Do
remember
you
I
remember
really
that?
well. Yeah, like
I
yesterday.
I
Like
kind of
yesterday.
think, I kind of think we're you know, like the way they'll find a buyer for the bonds. Like you don't want to
Yeah.
go there. Like yeah, well actually you may not even go there. Like okay, so if you said we had and then this gets back to what's the other one? It's not Triffin's dilemma. I can't remember the other catchy one they use, but oh, if we get they all start shut. You know what I'm talking about. If we get a recession,
Oh,
the
Triffin's dilemma or whatever it
yeah,
is. Yeah,
yeah,
yeah. The other
yeah,
guy no
yeah,
one knows
yeah.
about except his bonds.
Yeah,
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 exactly.
yeah. Only you and I know about the shrub.
Yeah,
Nobody
yeah.
else knows about it. Okay, but they'll go on. Well, if we get a recession, whatever. So, like,
By the way, can I just interrupt one
please,
second?
yeah,
Okay, go
go.
ahead, go ahead, go ahead. No, go
No,
ahead.
no, you
Because
go
I
ahead. You go ahead. Go, go,
okay,
go.
so we had this conversation, you and I remember it like yesterday. We were talking and we were basically having this back and forth on the buyers of treasuries. And we said, who's going to buy the treasuries? Like the
Right,
foreigners are stepping out,
right.
the American banks are stuffed, investors are down on everything. So they need to cash up. And, we just started laughing because it was so bad that, that like there was basically, it was just an obvious short to
Yeah,
avoid the bonds. So here's a wild thing. Okay. So since we had that discussion, dude, this is the wild moment. Like I cannot believe it. So I reckon we had this back in June of 22.
yeah. Yeah, exactly. I was
Okay.
gonna say 2Q22.
So
Exactly. Go on. Yep,
the
yep,
S&P crashed after our discussion from like we started the discussion at like 4700 and that by that point it crashed to like 3700.
yep.
Okay. So from that point, the S&P is from 3,700 is up to 6,000 now almost. Okay.
Right.
But here's a wild part. TLT, which is a 30-year bond ETF, to make it simple, it was at 120. Today is at 85.
And shrub. Keep in mind the TL. Yeah, that is insane. So
Yeah, that's
if we were having
insane.
that comp, yeah, okay.
That's
So shrub,
insane. So we
shrub.
were right. So we were
Yeah, so
right. It's
shrub, so
down
shrub, shrub,
30%
so
since then. Yeah.
yeah, so shrub. Let me again, take a shot at myself. As we know, I started the ETF too late. I got out over my skis. I stayed too short, too long. It's a whole nother story. We could just do a space on that alone. But if all you knew, to quote John Roque, if all you knew and nothing else was that bond yields were going to go from wherever they were, 350 or whatever we were talking at the time, to 450, and deficits were getting bigger and bigger. If that's all you knew and nothing else, how many people actually think the market would have gone up 65%? I don't think so. I mean, this
Yep.
is
Yeah,
great.
exactly.
This is craziness.
Yep.
But I digress. Okay, all
No,
right.
but this is a wild thing. It's something to just consider that,
Yep,
and this is why I prefer actually the put spread versus the short at this moment, because people could be saying like, look, he's gonna jack up the deficit and whatever, the last 2 years that we saw, the last 3 years when the stock market doubled but bonds went down 30%. Hey, why doesn't this repeat for one more year where they just juice it up to
okay, yeah, okay. So trouble.
7,000 and then but bonds traded like 6. So what needs to happen to make this all puke? I think there's like a magic level,
Yep.
and there is a stress level beyond which this thing just ends.
So
And in the
shrub. Let me.
UK, yeah, so I'm
Yep.
just going to say
No,
that in the UK, there was a level that level was like the sterling below 120 and the
right.
bond yields above 5. So you kind of want to see where the stress point is for this thing to be in danger.
Okay, so Shrub, let's stay with that. Let's tease that a little bit further. Okay, so what we're discussing, this is all denominated in American pesos.
Yeah.
So, um, I'll ask the leading question, but again, as my grandfather used to say, never ask a question you don't already know the answer to. So, how does this make you think about the dollar? And also keep in mind, most all countries are screwed up and currencies are always a relative thing. So how does it make you think about the dollar and things like gold and Bitcoin?
Yeah. So I think the dollar, it's so the biggest call I made this year was actually saying at the beginning of the year that a Trump trade is to short the dollar, because that was very much against consensus. And the way I arrived at that was I basically arrived at that by just looking at Trump's own statements and Besant's own statements, that basically they said the other countries are doing currency manipulation, and they're stealing from us by using their currencies. And Besant even wrote, long letters in his previous fund about this, and he wrote about the Japanese as well, that they're manipulating the currency. So when you say that the other side is manipulating the currency and you want them to stop, that means you want to weaken your own currency, because, as you said, it's a relative game, right? So if you put all that together, it also, that was one way to rebalance the trade deficit, was to actually weaken the US dollar, which I think is it's not explicit, it's almost explicit strategy, because, you saw that even Besant, so it came out like today, Korea, they confirmed that they discussed with the US side um, about currency. So they actually confirmed it, that they discussed about currency. So I think there is a policy to weaken the dollar. That's number one. And I think the most obvious trade out of this is not gold here, is actually the yen, because the most obvious currency manipulator in the world is actually the Japanese, which they devalue their currency, they debase their currency by 30% over the last 5 years. And they keep getting away with it because, their name is not China, it's Japan. So, everyone wants to blame the Chinese, but actually the Japanese are the ones that underwent currency manipulation for the last 5 years. So I think the US is going to come after them on that point. So that's the obvious one. Now, gold, Bitcoin, I mean, gold is a bit overbought. Everyone is long gold, so I think it's at risk still. But long term, of course, is going to be just fine. Bitcoin, same story. It's a bit too jacked up, but long term is going to be fine. Because at the end of the day, the one thing that all governments in the US have had in common since 1970 is a currency debasement, and actually across the world, let's be honest about that. So currency debasement is a function of the market we live in. That's why I am always supportive of having real assets, and uh, and you just cannot be in cash in a market where they just actively try to debase their currency. You just have to find spots to preserve some value here and there. um,
Right.
and the worst type of market is actually something like a 2022 was the worst type of market. I mean, we did very well out of it because
Sure.
we had the energy side worked on the long side, and there were longs that worked, but if you have a proper stagflation,
Sure.
then it becomes very difficult.
So, Shrub, I want to open up the questions from others. So everyone has a question, please raise your hand. But in the meantime, you just triggered me with another word you mentioned, energy. So, I totally get drill baby drill, and the Saudis are cooperating, and the chart looks terrible, and everyone hates it. But I stand back and I said, "No, this is just the wrong price." And I'm
Yeah,
tempted, sorely tempted to do energy, but we could talk about what part of energy.
yeah, I
But
know.
I don't have anything on the sheets right now because, as John Ruck always says, don't look around too many corners, and the monkeys, as you say, they're not. It's not on their bingo card right now. So I'm very conflicted about energy. I have violent
Yeah,
arguments with myself. Even number days I'm bullish, odd number days I'm bearish. So, can you give me your stream of consciousness about energy right here?
yeah. I just think energy is a tough place. I'm on the same boat. So I think it's a tough place because on one side, you have it's a bit like bonds. Let me just go back to the bonds 1 second. So why are the bonds not even lower? The bonds are not even lower because, by the way, people are overweight bonds according to the recent surveys. And why are people overweight bonds? Because they actually think there's a recession coming. So
Exactly. Oh, there's a recession,
yeah,
and shrub. Remember, we're also pursuing austerity. Remember that,
correct. So we
right?
have the Doge, and it's Doge, and we have recession. Yeah. So I mean, which is all like whatever. So oil has the opposite problem. So oil cannot get up. People don't own it, so people are record underweight oil. So at the same time as they're overweight bonds because of recession, they're underweight oil because of fears of recession. So you have that, and then on the other side you have geopolitics with Trump trying to keep oil down. Um, So that even creates a worse narrative for oil. Now, I think at some point, like from my energy friends that actually track these things closely, the production in the Permian is actually flattening out. In the US, it's flattened out. So if you keep oil price at these levels and you have all these production cuts in the US, the market can quickly rebalance. And if we actually do have an okay economy, then this is the wrong price. Oil is going to be at 70 again.
Yeah, we're agreeing.
I have a very small exposure, which to be honest, I've just been carrying it for like, I had some leftover from 2 years ago that I just carried. So it's not big. I have like 3% allocation. So it's nothing. But I'm kind of looking at it, I'm itching, like I want to buy more.
Right.
But I you know what's stopping me? It's actually what's stopping me is like I feel like I'm going against the narrative by buying energy, which I don't mind doing, but I just feel like
Yeah.
you know what I mean. Like it's
Yeah, no,
yeah,
we're totally there.
yeah,
I think we're all watching the charts.
yeah.
Speaking of charts, I want to go first to Tommy Thornton and then to David. Tommy, good to see you. What's on your mind,
Tommy,
Tommy?
hey, I just saw the Shrub is on here, and normally I'm chatting with him in our Bloomberg chat, and he's always my favorite meme master. I mean, there really isn't anybody better than the Shrub, and I am a subscriber to his Substack, which I think I highly recommend for the amusement, but a lot of good calls in his work, and a lot more than you'd think. But he does great work, super detailed. Adds a lot of humor, and of course, it's not advice because he's a shrub. But I'm a big fan. But anyway, the market seems a little tired here, and it's had a good run. And I know that it seems like, oh yeah, well, uh, it can go a little bit more, and maybe it can. And it's really, I'm looking at my screen, and I see a lot of, the meme-ish type momentum names doing the heavy lifting here today. You have Tesla up, and yeah, of course it's up, and so in Nvidia, which I'm long Nvidia, I bought that right, and I just think that when you start to see that happen, and breath is weak today, not disastrous, but it's starting to show little signs of tiring out. So that's kind of my view right now. If you've captured the low pretty well, I would definitely say ring the register on partial positions or just take some things off.
Yeah.
Uh,
So Tommy, let me ask you, and then let me ask Shrub, and then Tommy, I'll come back to you. So Shrub and Tommy, both of you, because you think kind of great minds think alike. Shrub, first you, then Tommy. When you see the shit flying like we're seeing right now, this is not. And you may say, well, it's been so persistent, it's not true. But in the past, you go back a few years. Usually, when the crap starts to fly like this, it's more closer to the end of a move than the beginning. Shrub, do you have any thoughts on that, or Tommy, do you have any
Yeah,
thoughts on that?
yeah, sure. Hey, Tommy, I'm so glad you're on. I'm actually like a super happy subscriber of Hedge Fund Telemetry. It's actually the first thing I've ever subscribed to, believe it or
Oh,
not.
oh God, we got it. God,
So,
all right, this is
so
this is getting
I
ridiculous.
know, but I have to do it, man, because
All
I've been
right, go
following
on, all
for
right, go
Thank
for
you.
for
on.
That's
five
nice.
years, and
Blake.
I
But
love it.
Shrub, I
Come
already
on, come
Shrub,
on.
Shrub, I already pumped his letter the other day when we
Yeah,
did a
okay,
room.
fine.
Go on, all
Okay,
right, go on.
so look, this is where you have to just put all the indicators together. That's why these the marks that Tommy follows, and I follow like the way that Tommy follows the marks. I follow sentiment in different ways. So I just want to see what the monkeys are saying. I want to see the sentiment, and when I see the shit flying, it does raise alarm bells. But in reality, this has been an interesting market for one very simple reason. It's the retail that bought the lows and stayed on the ride versus institutions and versus hedge funds um, actually managing the downturn well, but not capturing the upside. So I think that the hedge funds missing out on the upside is what's driven the last few percent.
Yeah, Shrub. I couldn't agree with that more. As a matter of fact, we had a room the other day. Can't even remember the days all run together. I think it was Monday with Jack Farley, and I want to find the tweet that I put in the nest that day. Here we go. And don't have to take this literally, but figuratively, it's correct. This is from this guy, Professor Satoshi. I'll put it in the nest.
Right.
So Professor Satoshi writes, Joe Wang is short. That's Fed guy. Citrini is short. Lecker Capital is short. Old Kobayashi letter subscribers are short. Ford Guidance is short. Paul Tudor Jones is short. Stan Druckerman is short. Point 72 is short. Morgan Stanley is short. And Goldman is short. Retail has won.
Yeah,
Exactly your point.
exactly.
Exactly your point.
Yeah. No, but that's the thing though. In reality, because I speak to a lot of people now that I'm writing my diary, and in reality, the hedge funds have been the ones caught offside, as in the ones suffering in the sense the moves are too fast for them. So that's why the hedge funds are tired, the institutions are a bit, worn down a bit. But retail has had a great time. Now, how does it play out from here? Like the way to think about it is very simple. You're just one tweet away from the market being down 5% when it's overbought. And also you're one tweet away from the market being up 5% when it's oversold, which is what happened in April. So it's that simple. And to Tommy's point, if you had a good run, which we've had a great run, had a good time, that's the time when just sit back, put a hedge on, or trim some longs that worked out, and just wait for the next tweet or the next event, because the bond market is looking heavy, and breadth. Okay, today breadth is a bit worse, but let me put you the bull case. So the bull case is Nvidia reports end of the month. Nvidia's numbers are going to be very good. The Saudis are buying a billion more of chips, a million more of chips a year. So the AI story has a few more legs to go, and then the 90-day truce produces trade deals, and everyone is great, and the S&P is at 6,000. Fantastic. Well, once you get to the tax deal, maybe that's when things get shaky, which could be end of June. So maybe nothing happens between now and end of June. But at some point, there will be a reckoning on this issue, because if you think about it one step further, Besant is a disciple of Druckenmiller. And what is Druckenmiller been warning about all these years? He's been warning about the deficit. So I just can't see them not caring about the deficit at some point, because it's just too big. Like, it's mathematically difficult to not deal with it.
Yeah. Hey Tommy, any thoughts about the crap, the Goldman Sachs crap basket, all that stuff? What is it historically when it's gotten on fuego like this? What does it mean?
Which basket?
All the garbage stuff.
Oh,
The crap, the ARC, the
yeah,
Goldman Sachs short, all
you know,
that
the
stuff.
old saying is, when
Right.
pigs fly,
Right.
that's more of a toppy market, and of course you can go back and look in like February 21, when you had all these short squeezes and stuff that was just going nuts. I agree on that. One thing also, as far as the hedge funds, one of the reasons why I sort of became a little bit more bullish is that right after Liberation Day, all the Goldman Sachs prime brokerage data, Morgan Stanley prime brokerage data, it all showed like, hedge funds got super short, and so the positioning was offsides, and they really, I would say, the covering has probably been pretty substantial, but they're just not long, and they missed this move, and it certainly it happens, and perhaps retail. I mean, as far as much as you say, retail, nailed this. Well, retail also, wrote it down, and they're mostly
Yeah.
in
Yeah.
indexes,
Yeah.
and so they're flat on the year. So
Hundred percent.
that's fine. But um, the thing, regarding the bond market, this has been, numero uno for my risks on my risk list. if rates start to move higher. And a lot of retail people look at TLT, and if you go back and you look at the long-term chart of TLT, if it's like 85 right now, I'm not looking at my screen,
Yeah.
but if it breaks 80, that essentially is, and that's the 20 to 30 year mix ETF in duration. If that breaks 80, that's like new lows. And that would basically mean that, the bond prices are making like a 25-year low. And if you could imagine, putting that into a different market, such as equities, making a multi-year low, that would be pretty substantial. So this to me is really the biggest risk for all markets right now. If the tax bill, which is being bantered around Congress with those fine folks, if that gets done, it's going to add to
Yeah,
the
yeah, yeah,
deficit.
yeah, Tommy. I think you came in the room just recently. We talked quite a lot
Yeah,
about that
yeah.
earlier.
So
So
that's my
Yeah.
my big
cool. All right,
concern.
all right. Let's keep it moving. We move. Bring a couple other guys in the conversation. I want to go to David and then Gnostic. David, good to see you. Got a question or comment for Shrub?
Yes, sir, George, and fantastic space. Honestly, we're so back with your spaces. You've been collecting fantastic minds to discuss genuinely interesting topics. I have a very general question. LaShrub, this has been on my mind for a while because of the current revisions within tariffs, and I would actually enjoy LaShrub, Tom, and George, your opinion on this. But do you think we are still in a structurally weak macro environment, or because of Trump's relief on tariffs, has that shifted to a certain extent? I know it's a general question. I have some assumptions as to where you're going to go with this, LaShrub, due to your prior conversations, but I just like a more nuanced approach to that
Yeah,
specific question.
that's a great question, and let me just break it down on the easy part. Okay, the easy one for me, and that's why I got long a couple of months ago, was Europe. So Europe was actually in a bad macro environment, but not bad macro, like a slowing macro, because of Germany. So Germany was slowing down. So the German fiscal plan, injecting 1 trillion euros into the economy, was a game changer because this was a country at 60% debt to GDP with very low fiscal deficit. So they're adding 20% debt to the GDP, so they're juicing up their economy. So I think Europe is going from lukewarm to better because of the fiscal side. China has been pretty weak last year, but actually they're doing their own fiscal plans, which are improving the economy. So they were doing better. Sorry, they were improving as well into Liberation Day. The US was actually at its as good as it gets moment because of the 7% deficit from the Yellen administration, and all the and all the perks that they got in order to re-elect Biden. But I think it was like just humming along instead of like crashing as such. So what happens with so here's where it gets interesting. Now, the numbers so far were good. And I think this is where it's again where I differentiate myself with Wall Street in the sense that I've used my two remaining brain cells. So Wall Street says the numbers have been good, Jan, Fed, March, April. So the economy is fine. Doesn't matter. The tariffs don't matter. And that's it. Where I've been saying is that the numbers are good because there's been a lot of front loading. Because any sensible being, if they see something, if they know that something is going to increase in price in 2 months' time, you're going to buy it today. So if you think the iPhone is going to be 50% more expensive in 2 months, you're going to buy it today. But for Wall Street, they said, we don't see any front loading. Everything you see is actual demand, which is nonsense. Like, this doesn't make any sense. Well, that's why it's nonsense, I guess. So what I'm saying is that I think there's been a lot of front loading in demand, and that's why the numbers are actually okay-ish. And just an anecdotal story from a reader of mine and a friend. The guy's a developer, and he said, he reached out and he said, look, I hear you on the front loading because that's exactly what we've done. So he said, we bought a lot in February, even before Liberation Day. He said, we bought a lot in February thinking that there's going to be an increase in tariffs. And then when Liberation Day came, here's the surprising part. He said, we ordered even more. And I said, why'd you do that? He said, because we need those materials. So we wanted to ensure we have supply before something even worse happens. So the guy not only bought before Liberation Day, he bought aggressively after Liberation Day. But here's the other interesting part. He said, after May, June, I will not order anything. I don't care if tariffs are at 0 or 20. I've ordered enough to last me for 6 months. So what I think we're going to see in the next few months, I think we're going to see some slowdown because of the front loading. But I don't think necessarily that's going to be a bad thing, because I think the market is probably just going to see that through, and they're going to say, because how Wall Street said 3 months ago there's no front loading, and they would say it's bullish. Well, now they're going to say, guys, don't worry about the weak numbers. There's been a lot of front loading, so it's fine. It's going to be a cyclical bottom at this point. So I think that's how they're going to paint the picture, because I think so. What I'm trying to say is the next 3 months, the data is going to be noisy. Investors are going to look through it, because I think what everyone's going to be focused on is the big beautiful bill. And I think what's more important is, as you see this weak data, will the bond market stabilize into the bill, saying, oh guys, the Fed needs to cut, or the bond market, or people buy bonds as a recession hedge again, thus supporting the bond market into the big beautiful bill. That's all I'm thinking that now. Like, I don't know how it's going to play out, but that's my thinking.
Yeah, Shrub, I largely agree with you. And I guess my only contribution at the margin would be, I'm reminded, Shrub, we all know this, the market's not the economy, and the economy's not the market. So, David, even as we try to spitball and answer your question about the economy, I mean, I don't know what that means necessarily for the market. I posted up to the nest a tweet I put out from last night. I shamelessly stole some of these charts from Market Year, as I always do. And it just refers to how, like, each of the last 2 years, people looking for a recession hasn't happened. It's like the little boy that cried wolf. But again, John wrote, please call your office. Let's not walk around too many corners. And Cantro as well. I mean, jobless claims are still kind of behaved. High yield spreads have come in big time. There's even a tweet up there. If you look at the thread, it shows year on year open table restaurant reservations, blah, blah, blah. So, like, I get there are localized parts of the economy and things can blow up. So, like, I'm having Melody write. We'll talk about the conference in a minute. So, like, I was with lunch with Melody last week, and it's like I wanted to, like, light my hair on fire. She was telling stories about the non-bank banks and all how it's all going bad, and we're not going to have the housing recovery. And I believe all that. And we can also talk about, unfortunately, the K-shaped economy, all the people at the low end getting their real income squeezed in a big way. That's all true. The fact of the matter is, in the aggregate, if you look at the private sector, overall debt ratios are well behaved, debt service obligations are well behaved. Yes, it's getting worse because rates are skyrocketing, but the real excess is not in the private sector, it's the public sector. We're more likely to we're not going to have a credit crisis, we're going to have a sovereign crisis. And so, yes, we can have a recession. We may have a recession. I know I got in trouble with that call going back in 22. I didn't get the memo. Maybe they forgot to send it out. I don't know. Too many people had it right, whereby it's like, oh, everyone had fixed their obligations, the long-term obligations. So, Apple issuing, a zillion-year bonds, and people locked in at 3% mortgages, and blah blah blah. And as it turned out, you know, it's always obvious in hindsight, isn't it? The economy was less interest sensitive than perceived. But let me roll with that right now. So if that is true, yes, there are parts of the economy that are interest sensitive. Not arguing about that. All right. And we do know car loans are going upside down and housing is in the dumps and blah, blah, blah. I get all that. But if the economy is not as interest sensitive as this is the narrative that they claim, and Shrub, I'd like your opinion on this. I don't see how cutting rates is really going to solve the problem. And as a matter of fact, I'm actually concerned. Oh, Shrub, I'm going to throw a whole bunch of stuff at you. So it's one of these speech and a question things. Respond to whatever part of this you want. I could actually make the case that rates continue to go up, and it's less about recession. People are going to say, "Oh, gas prices are going down, and owner equivalent rent is going down, and blah 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 blah, and we're going to be at 2%, and blah 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 blah." So, George, how can you be bearish on bonds still? I go back to Shrub. It's like this is about spending and real rates, and I actually think if they cut rates, as some have suggested, because of the need to lower the interest costs or whatever, I think the bond market would actually revolt. I think yields are likely to go up. I mean, do recall
Yeah.
last September, Druckenmiller, when they had that cut down to 360 or 370, and Jack Farley, I'm sorry to throw him under the bus, he was just completely wrong about Druckenmiller. Bond yields soared after that. I mean, we went from like 360 to 440. So, Shrub, let's just drill down a little bit further on interest rates, the bond markets, et cetera, et cetera. Because I just, let's tease this out a little bit further. Like, where like if they were to cut rates for the wrong reasons, right reasons, whatever, in the current environment right now, if they cut rates, you think bond yields will go up or down?
Oh, up 100%. They're going to go up 100%.
So, Shrub, I'm now going to take it even further. It's not a question that was asked, but I'm going to run with it because I talked about this the other day. If there's limited scope for rate cuts, if any, and if it turns out there's limited scope for further fiscal expansion, if any, all right, so we get no more fiscal stimulus at the margin, we get no more monetary, rate stimulus at the margin. I have a hard time seeing like the case. I mean, we're going to have a recession, but I also don't see where we're going to have robust growth either. It may just kind of like meander along the way, maybe the slight downward bias, really slow growth. And given what's priced in the equity markets, I just don't think that's a good scenario.
Yeah.
Thoughts?
Look, we have a very strange situation since COVID. So right now, 50%. So the U.S. economy, as well as the world economy, is driven by the U.S. consumer. Okay, so far so good. The U.S. consumer is what, 70% of GDP or something. But the interesting part we have now is that 50% of consumption in the US is done by the 10% of the people. And this is what's wild. So so the fact is the consumption is driven by 10%, and that 10%, they don't really care about interests. They care about the stock market. If you think about it. So, a wealthy person is not going to, probably not going to have much of floating rate debt, might have a mortgage, but he's going to have a lot of money in the stock market. So I think consumption is actually more sensitive to the stock market than interest rates right now. And by the way, for people that are going to come and diss me out on this is exactly what happened in 1929 as well. Huh? So 1929, for those that study history, it was actually a very small group that was invested in the stock market. But just the general pessimism of, and I hate bringing up 1925, 1929, but it's a good story anyway. So the general pessimism of the rich people,
Reminiscence of a Shrub
reminiscences of a
operator.
shrub operator, exactly.
Go on.
So yeah, so the general pessimism of the high end actually caused depression to the low end as well, because they're also the guys that own the businesses. So just anecdotally, in April, people were like, I live in Monaco, and Monaco has never seen a distress cycle. Even in 08, there was no distress cycle. In April, the banker was telling me, oh, you know what? We're gonna get guys margin called, and it might release some real estate in the south of France or Monaco, which you heard that in COVID in March, and then you didn't hear it again. But in April, people were like concerned, and the reason why they were concerned was because of the currency, not because of the stock market only, because the currency was down. So the dollar was down 10%, plus the market was down 20%. So the portfolios here, because they don't hedge their currency, they were down 30%. So they had like the equivalent of a '08 hit in April. So what I'm trying to say is that even the wealthy guys got shook outside the US by that move. So consumption is linked in a way to the stock market.
100%.
So
100%.
going back to the interest rates, if they cut interest rates, is it going to really do that much? I don't think so, because unless unless you're talking about like a 200 bips cut and you reinvigorate the housing market, that could be more interesting.
Yeah.
And I haven't actually tracked how the housing the housing transactions are lately, but
Yeah,
I'm sure there's.
they're
Yeah,
not they're shoved. They're not doing a whole lot. One week the refi's up, then it's down. It's doing
yeah,
nothing. I
yeah,
mean,
exactly.
and it's also contracted so much. I mean, if it goes down a little bit from here, it's not really going to matter all that much. But I'll just tell
Yeah,
you, talking to Melody, and by the way, I have to show for my conference in 1 second. The housing market, we're going to be screwed for a long, long time. And she'll get it. By the way, let me just I want you to talk about Mag 7 for 1 second before we go any further because I keep forgetting. I show for you, I show for Tommy, I got to show for myself. So we're doing this fantastic independent research conference, virtual conference, Thursday, June 5, 3 weeks from tomorrow. It's featuring many of your favorites. So Jay Pulaski on global equity strategy, Ian Harnett on Europe, Louis Gov on the tariff war in Asia, Michael Howe on liquidity, Jordy Vesser, Tavi Costa, Mike Rothman, the senior oil guy on the street, been doing this for 40 odd years. Melody, you all know, is going to talk about housing. Star Versailles treaties on global market conditions. John Roque, our favorite technician from the street on charts. And then we got Mark Cahodes talking short ideas. It's up in the nest. The registration page should have been up already. It's not. It's my fault. It will be coming. It's $349 for 11 speakers, the best of the best. So it's just a phenomenal conference. So Shrub, coming back to you. So I think it really would be helpful to people in this room, especially as you're in Monaco. You invest all over the world. The role of the dollar and the role of Mag 7, the point you just raised is what's put the thought back in my head. We've talked about it before in these spaces in recent weeks. That if you're a foreign investor, a non-US investor, you're sitting in Zurich or Monaco or in Japan, and I share your bullishness on the yen, by the way, that the last umpteen years, your return in US markets, be investing in US bonds, US equities, Mag 7, whatever it is, you got the local return, but you got this currency kicker on top of you. And so, yes, markets have recovered, but there was a time not that long ago. I'm old enough to remember when 5 weeks ago, whatever it was, Mag 7's down 20 some odd percent for the year and the dollar's down. And so you redenominate the Mag 7 or the S&P or the Qs away from American pesos, put it in, if we put it in Turkish lira, I mean, anything looks good, right? But
exactly.
but you re-index the U.S. market into yen. Let's use yen because or Swiss francs because it'll make the most. You know us. You and I want to just
Yeah,
shade the statistics to make our case, right? So you put Mag 7 in yen or in Swiss francs. That is one fugly looking chart, right?
yeah,
So more important than the chart, those folks you were talking about, and I want to bring in the Taiwan dollar, from the other week. You start to see the cracks. Like if you're sitting there and you're in Japan and you've been doing this yield pickup bullshit, we know the Japanese are yield pigs. And for years you've been getting these returns for your unhedged US bond portfolio, or you're the Swiss National Bank and you've got some, outrageous allocation to the U.S. equities in Mag 7. Who knew, right?
yeah.
Okay, all of a sudden it's like a free lunch, or now you saw the story the other day. I know you do too. Sorry for the speech and the question, but I'll give you a rest. So you see the story the other week. Oh, the Taiwan dollar. Yeah, I just love this app. It's just Twitter. I'm never going to get rid of it. I'm never going to stop calling it Twitter. So people tweet out, oh, the Taiwan dollar is moving. First they're like it's crashing. It went from 31 to 28. So the knuckleheads don't realize that the number going down is actually good. It means it's getting stronger. But
Exactly.
but I digress. Okay. So then once the knucklehead letter, it starts with a K. I'm not going to mention names, but you know who I'm talking about. Um, Once they realize they got it the wrong way, then it's like, oh, now then the narrative is all these Taiwanese insurance companies are going to lose a fortune because they got 1.7 trillion in foreign assets, and I'm like, this is Captain Obvious. See, Strobe, we got to get together more often. This is Captain Obvious 101 thinking, like first order think like you wouldn't believe. Okay, and no one stops to think like, oh, wait a second, maybe this is a bigger part of the mosaic. And as our good mutual friend Louis Gobb would say, like, wait a second. Maybe the Asian currencies
Yep.
are seriously undervalued. Maybe this is a thin read indicator. Maybe the RMB is going to go up. Maybe the yen is, which is sort of, so maybe the tectonic plates are shifting underneath the currency market. So could you speak? And here I'm landing this plane. And again, one last observation. I remember, I can't, who said this the other day? I think it may have been Anatol Koletsky or somebody. They were writing about how they were at some conference and one of the head major gurus, I'm not going to say guru at JP Morgan was saying one of the most notable things to this person was that the attitude towards what's going on in the US is so much different outside the US than inside the US. And I'm not talking about Trump. It's people just, they're now worried about the currency. They just see the Liz Truss moment coming, so on and so forth. And the people here in the US are so freaking myopic. They just don't see it. So could you can speak to any of that, all of that. I know I gave you a speech. I was trying to give you a chance to rest, but I just think there's a huge disconnect going on here and what people are not seeing in the US market. Thoughts?
Yeah, absolutely. Look, it goes back to American exceptionalism, which, by the way, Liz Truss got hit by British arrogance because she didn't realize that she doesn't run the British Empire anymore. She runs a market with a country with a big trade deficit and a big fiscal deficit. That's why the market revolted. And similarly here, like the U.S. has the reserve currency in the world, so they could get away with it. But what we're saying here is that that's the risk, that they don't get away with it. All we're saying is you have to be aware of that
Yeah,
risk, and it's worth monitoring. It's going to be monitoring this for the next 2 months. And like we said this from our conversation back to 2022. The bonds are down 30% since
yeah,
then, but there is a pain point, and I think the pain point is the 5% yield level is a pain point, but the dollar is also a pain point as well. So they have to put them together
exactly.
because it goes back to I wrote this piece a few months ago, which I called it Klaus versus the pod monkey, because I wanted to explain the big difference in flows in the market. So the pod monkey is just a trader sitting in a supermarket hedge fund, which they call pods. So big hedge funds now, they have these pods of managers that they allocate to. So the pod monkey is responsible for the short-term moves, the day-to-day moves. But the big moves are taking place by pension funds. And the European pension funds, I refer to them, lovingly as a guy running it called Klaus. And while the pod monkey is trading the headlines around Trump, Klaus is looking at what's happening in the U.S. and he's panicking because Klaus has 100 billion and 70% of that is allocated to the U.S.
Shrub,
market
stop, stop, stop,
unhedged.
stop. Say that again, because I read that when you wrote it. Could you just say that again?
Yeah,
That's irresponsibly long and overweight U.S. dollar assets. Say it again.
yeah, they are like I was having some roundtable discussions with pension funds and family offices here, and on average, it was 70% allocation to the U.S. With the currency unhedged. And why was it unhedged? Because it worked. It worked all these years, right? So just to give you an idea, let me just give you the numbers. So since 2019, you won't believe this, $10 trillion came into the US equities, $10 trillion. And the majority of that was Klaus, so the European pension funds. And UBS did the numbers that there's about $14 trillion of unhedged US assets
Yes,
at risk.
yes,
Okay. So this is basically people that took the money out since COVID, and they've been cozily invested in the US market. And it's worked well for them. You know the old story. Like if you were long IBM, you didn't get fired, right? There was no
yep,
career risk being
yep,
long IBM. These guys, they've been long Mac 7 for obvious reasons. Great companies and all that, fine. But they've been long that, but without hedging the
yep,
currency. That's why I sat down to think about this. I panicked because guess what? I looked at my portfolio as well, and I was all in dollars. Personally, I'm in Europe, right?
yep,
So I sat down, I'm like, holy shit, I have a big, like, as conservative and careful as I am, I have all my money in dollars.
Yep.
So that's when I wrote this up. I wrote this End of American Exceptionalism like 3 months ago, and I said, the euro was at 103, and I thought, what if there's like a ceasefire in Ukraine, and well, the euro's going to go to 120, which it was there like 2 years ago.
100%.
So
100%.
I panicked, and I started, I switched cash into euros. I bought calls in euros. Then I did the yen trade. Then I did a few other trades to just protect against that. But the real wealth destruction for Klaus and for others is not actually that the Max 7 lost 15% at some point or 20. It's the fact that the currency went down because, the guy can come and bullshit on his investment committee and say, oh, you know what? Microsoft has a 20% correction every 2 years, but it always bounces back. But you can't come in and say in your investment committee, oh, we lost also 10% because we didn't hedge the currency. Because the investment committee is going to come to him and is going to say, you fucking idiot. We
Yeah.
are a euro
Yeah.
denominated
Yeah.
liability.
And
We have
Shrub.
liabilities euro
Yeah.
denominated,
Yeah.
and you didn't hedge
Yeah.
70% of your book.
Yeah, and Shrub, it's even worse. But yeah, but guys, don't worry, I got this. President Trump has assured me he wants a strong dollar. Hello.
Exactly. So
All right.
this is a screw up because you can run all your models about about equities and say, you know what, we took a decision, we're going to be investing in
Yep.
equities. But once you mess up your currency and you have liabilities in local currency, that's the real pain point, and that's what happened to the Taiwanese guys. And I'm telling you, this hasn't been fixed across the world because I just see it
100%
here. I
Shrub.
just see it here as well.
100%. All right,
Yeah.
listen. You've been look. We're gonna get Gnostic in here for a question. I'm gonna give him the last word, but before we do that, we're going an hour and a half. This has been awesome. The problem with these Shrub is we start. It's like two old lovers. We start and we can't stop. Everyone, it's in the nest. Shrub with his ShrubStack. Seriously, you should subscribe to him. And I'm going to give Tommy another plug. Subscribe to Tommy as well. They're both. I mean, if you cancel everybody else and do those two guys, I think you save a lot of money. And your investment performance will improve. All right. So Gnostic, last question is yours, and then we're going to close it up. Oh, we're going to get Rusty too. Gnostic, go ahead.
I don't think the link is working for Shrub Substack. I tried going in there and it says can't be found. So if you could post that again, it'd be a real help, Shrub. And nice to see you, Shrub.
Yeah,
Oh, good to see.
Yeah,
Yeah.
Shrub. Can you put it up in the nest, Shrub? Because I probably put the wrong link in there, Shrub.
Yeah, I'm gonna try
Or
and put it
Dilly,
in.
if you
Yeah,
don't,
I
Dilly,
got
what?
it. I
All right,
got
you
it.
got it.
yeah.
Okay, fine.
Thank
All
you,
right.
thank you.
So Gnostic, other than complaining to Shrub that he's got a broken link, you got a good question for him?
George, are you saying that Shrub is broken?
No, I said his link is broken. I'm saying maybe he's technologically
Oh,
as incompetent as I am. Go ahead. Go
you
ahead.
cut off the last part there. I heard Shrub is broken. So,
No. Shrub's link is
I've been
broken.
broken a long time ago.
Shrub, we know we've talked a long time.
All
So
right,
Rusty
So
sorry,
knows
it's
I
been
bad
a
get
joke
it.
while.
coming.
It's been a while.
Bad
Yeah,
joke
exactly.
coming. Shrub tried to put it up in the nest, but he couldn't get it up. Okay, Gnostic, go ahead.
okay, now we're back to old floor market jokes.
Go on.
Okay, so Shrub, what the hell is an investor supposed to do? I mean, most of the questions I had, you guys already asked and answered. So I'm a little pulsed here for one, but except where the hell do people put their money? Midterm, short term, long term. What the heck do they do?
I think Shrub dropped down for some reason, but Gnostic, as
Okay.
he's getting back up here, the one thing he said unequivocally, he likes the Japanese yen. I agree with that. He also was saying it's not a fat pitch to hit right now. You probably heard that part. But the one thing he's unequivocally said, buy yen. Longer term, the stores of value, gold, Bitcoin are fine, but right here, right now, they're overbought. So I don't want to say anything more, but I've been committing to memory what he did say. While we're trying to get Shrub back up, and I hope Shrub, you know what? Why don't you leave the room and come back? This app is like so screwed up. I mean, Dilly, do you think that's what he should do?
Yeah. If he leaves the room and then comes back in, he should get
Yeah, and if we don't,
invite. He can just
yeah,
press accept.
here
Oh,
he is.
here he
Okay,
is.
Yeah, there
fine.
you go.
We
Okay,
got him
sorry.
back.
Yeah,
Yeah, Shrub. So I was saying you would buy the yen, but
yeah.
right,
Look,
yeah.
I think.
What else would you
Yeah,
do, Shrub?
I think it's the time in my life that I've been the most geographically diversified. I've been doing this, long enough, and usually I'm actually overweight the U.S. And this time around, I'm actually geographically diversified. Um, so I think emerging markets, Latin America will be a good place as well because the valuations are cheap, the currencies are cheap. So they basically have exactly the opposite profile of the U.S. Cheap currencies, cheap valuations, politics improving, and actually even the U.S. government is supportive because Besant said very clearly that they don't want to make the same mistake with Latin America as they've done with Africa, where they let Africa in the hands of China. They want to make have closer ties with Latin America, also for geographical reasons. It makes sense. So I think Latin America is still a good place. I think Europe has a fiscal impulse at least, and even parts of the US will be fine. I mean, it's not going to be the end of the world. So, but what I will say is, if you see that bond market cracking into the big beautiful bill, then you should. If you don't have a hedge on that moment in time, I mean, that's gonna be tough. So that's the big warning here, for people to be aware. And also, if you're a dollar investor, that's why I do like have exposure to other markets, because if you're a dollar investor and we do have a reckoning in the US of some sort, well, the dollar is going to, either the bonds are going to take it or the dollar is going to take it, or both. But if the dollar takes
Yeah.
it, you're going to benefit a lot from being invested outside the US. And I think that's actually my base case eventually, because you can see a scenario where they try to just patch things up and the dollar is going to take it. I mean, it's not going to be it's not going to stay here, I think. So anyway, but it
Well
depends. Like,
said.
yeah, it depends. Look, we'll be doing this again in 3 months before the big beautiful bill. So
Yeah, you promised, Shrub. All right. Okay, so we'll do Rusty, and then we'll have David with the last question. Rusty, you got something for Shrub?
So what I gather is Shrub is long container ships. I
Shrub is now. He's gonna know. He's gonna do a ShrubStack all about. Yeah, Rusty's right, Shrub. Because the new hot thing is Shrub. You know, the last few months, you've seen all these these shots, like live footage from the port of Long Beach or Seattle. They're showing all the container ships and all the Furus are done with Jefferson's Paradox. They got maps of vessels going over the Pacific Ocean. All right. So now, because the trade thing's all been fixed, and Shrub, you got to drop out and come back. And I think Rusty, this is where you're going. Everyone's talking about, you got to get long container ships because business is going to explode now as people rush to restock. Is that where you're going with that question, Rusty?
Yeah, well, but no. Honestly, what happened is I was gonna ask, and I guess he did cover. I was gonna ask him about Japan, the yen, and then also about Latin America because
No, he's covered those already. I
you
mean,
covered that. But
yeah,
then
yeah.
I was gonna start with the container ship. But I had a
You
feeling
know
that was
what? You
gonna
know what?
happen.
Just for fun, I know a really good shipping guy. I think I'm gonna have to have him come and speak in this space.
Yeah, I'm curious.
Yeah,
Gotta
that's
be
fine.
rough.
So I don't know. I guess in Monaco, the goblins are plaguing Shrub because he dropped out again, Dilly. I don't know what the heck to do. Maybe you should leave the space and come back. Shrub, if you can make it back, that's great. Otherwise, we're going to rug you, even though you've been rugged by Elon. David, you got a follow up or question, David?
So yeah, it was particularly for Shrub because in his anecdotal story he shared with us, and it's to do with container ships. Like there's a lot of companies. I don't know if he has a specific number there. It would be interesting to see the aggregation of how much companies are actually front loading goods. And my question is, like, essentially, would we see then in that theoretical like development a stagnation in inflation? One, and even
yes,
a
sorry, can you hear
potential
me?
Yeah, hold on, Dave. Stop for a second. Shrub,
Sorry.
were you able to hear David's doing one of these George speech and a question things? Did you hear all that?
No, I just
All
managed to
right,
get in. So
so David,
David,
why don't you start with you?
rewind and start
Yeah,
over.
yeah.
David, start with the George impersonation again. Rewind. Go ahead.
I learned from the best, George. I learned from the best.
There you go. Go on.
So, long story short, Shrub, essentially, yeah, it's going on your prior conversation. You were saying in the anecdotal story that you're seeing this specific company front load a lot of their required goods, right? My question twofold, right? Do you have aggregated data to essentially correlate it with more than just one company? And then second is, do we see a potential stagnation with an inflationary impulse and even a move towards disinflation when we actually see the data come in the following quarters?
No, so the problem with the aggregate data, that's why you have to just fade Wall Street and just speak to your friends, is because Wall Street is going to show you the data. No one's going to tell you why they're buying something, right? So you ask people, why are you buying? They're going to be like, well, I'm not going to tell you. I'm just buying. So the data is the data, but it's the soft part that matters. You have to ask people, why did you buy this? They're only going to tell you, but they're not going to tell Bank of America survey or Goldman survey. That's why you have to play by ear how it plays out in the next few months. And then on the disinflation side, yeah, that's the whole point, that if we do get a slowdown because of the front loading, I reckon that Wall Street is going to take it. They always try to spin it positively. So they're going to spin it by saying, oh, look, I mean, the economy is slowing down, so it's disinflationary, so the Fed should cut. And once we get like a calmer market and a calmer bond market, then we go to the big beautiful bill in July, and they pass it through maybe because everything is calm. So that's the bull case. You have the disinflation into the big beautiful bill. That is the bull case. The bear case is that the bond market actually just sniffs it out, and we shit the bed before then. So that's why I kind of think it's you want to be watching. By mid-June, you want to be seeing how the narrative plays out and how the data firms out. So we have like a month of nothing, and that's when we're going to really just see how it's going to play out, I think.
Shrub, thanks. And by the way, Shrub, I know you probably got a huge allocation. I'm teasing you, but as they say, we are so back. We are so Trump. I don't know if you saw this, but I just saw a headline flash by that eToro piece of garbage, that trading app. The thing just came public. I think it gapped up 40% or something like that. So yeah, we are so Trump, Shrub. You're
We're
spot
so
on.
Trump. We are so Trump.
Oh, by the way, last question, Trump, Shrub. Last question. Last question. Speaking about we're so Trump, like I'm not gonna say does it bother you. I'm gonna ask because it bothers me, but you're more restrained than I am. How do you process and what do you do with the observation that when you have president come in, and I want to make it about politics, I want to make it about behaviors and things that they're
Yeah.
saying and doing. So we're going to keep this, we're going to make it apolitical. But what do you say about a president who comes in and shills his own coin? You have the trade guy, Navarro, saying, you only have a loss if you lose. You
Yeah.
have Lutnick saying, or as we call him, and we're having a new character coming in. I don't know, Dilly. I don't know where Howard Nutkick is, but he's going to get in here one of these days. You have Lutnick saying, he's shilling Tesla. I mean, like this. I would say to myself, this is not going to end well.
Yeah.
So, like, I'm sure your reaction was visceral reaction, the same as mine. What do you do with this information? Just a
Yeah. Look,
reminder that is it
I
a reminder
actually
at some point in the future it's a total disaster? Like what do you do with this? It's crazy.
look, George, I'm in a very enviable position that I am a parody publication, a parody Twitter account. So when I see these things now, I just remind myself that once you realize it's all nonsense, it starts to make sense because it's all because I'm like, these guys are giving me so much
Ru-
material to write about and
Rusty,
amuse
yeah,
myself in
yeah,
all these times. And I gotta tell you something, I'm gonna just finish with this one story.
yeah,
So I was with a guy I respect a lot. Like, this is an old-timer
sure,
hedge fund manager,
yeah, yeah, yeah,
runs his own family office. I was
yeah.
sitting with him and talking about trades and crypto and all that shit. And he told me about the Trump coin. And he said, I was with my traders, and the news came out that the first 200, the biggest 225 holders of Trump coin get to have dinner with Trump or something.
Yeah.
So he said, and my traders came out so angry about this, and they were like, complaining about the grift in the market and how can this be possible. So I just stepped back, and this guy's gloating about it. He said, I just stepped back because I'm a trader, and I said, you know what? Buy. And they're like, what? Yeah, buy. Because if it's at, it was at $9, and he's like, when's the dinner? They said in 2 weeks. It's like, buy and stay long for 2 weeks because no one's gonna sell for the next 2 weeks.
Oh my God. Oh,
And I'm like, well, there you go. There you go. That's when you realize it's all nonsense. This guy's like trading capital structures and distress, and he's just buying like a freaking meme coin.
Shrub, You're a piece of work. You've made it so real. This has been an unbelievable space, seriously. And Shrub, we got to do this again. We got to do this
All right,
again.
man. We
So,
will. We
all right.
will.
Hey, thanks to
You,
everyone. This
thanks
has been
again,
awesome.
George.
Thank you, Shrub, Tommy, Gnostic, Rusty, David, everybody. Good day, everyone. Take care. Bye-bye. Bye.